All right, hello traders. Mark here. Welcome to another Greenbridge Investing market analysis. This is a live stream, so I want to thank you all for joining me. In this session, I'm going to go over Bitcoin, the major markets, and select stocks of your choice, if you come here with tickers you'd like to see, hopefully. And the idea here is to get a sense of what kind of context we can gather to help give us clues for what we can anticipate for early next week. Okay, hey Ricky. So again, if you have any questions, please ask me during the session here. Also, if you're new to Greenbridge, please check out our website, greenbridgeinvesting.com. We have a free membership. We have a paid membership where we send out trade signals and analysis and portfolio ideas. Okay, so anyway, with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Hey, Michelle. All right, so let's get into Bitcoin. Again, any questions along the way, please feel free to ask. Now, Bitcoin has been uneventful, all right, over the recent week. And we had this pin bar. Let's start with the pin bar, because we sent out a signal, okay, based on this pin bar. But for those of you that received that text message and that email, you'll notice that the signal, we put that buy order way above the pin bar, okay? Sure, pal. I believe the order was 96.25 again, or 96.30, and the only thing we changed was the stop. As you can see here, the high was 95.05 of the pin bar. The following bar, which took out the high of this pin bar, was 95.96. So again, why do we do that? It's because we know that we're in a resistance zone. Okay, 95.64 to 10.168 is a pretty significant resistance zone, which has been asserting itself on the price for quite some time. So, and if this thing is going to move, it really needs to prove itself. And that's why we put an order so out of reach. We want the market to work. So this trade never activated. We never got into this position. But some people, who are less experienced or who act just on emotion, they'll buy into something like this and now they're stuck. Now they have to hope that this thing doesn't retest 8,500. Now, again, we haven't taken out this resistance and we had an uneventful week. Now, there's a couple of ways we can interpret this. And on TradingView, I put my opinion on there, or my view, and some people like to give me a hard time about it. But you can't escape the fact that we have a resistance and price is lingering, okay? Anyone that has any experience in this game knows that price does not linger at resistance levels. It's a resistance for a reason. It's because there's more selling activity than buying activity in the area. That's typically what a resistance is. We've had some rejections, but there's no follow-through, which means any kind of selling activity that shows up is being absorbed. That is a sign of strength in light of a bullish structure, okay? And this is what people seem to fail to understand, is this is a consolidation, okay, with the 8,500 low being the range low. That's a higher low, that consolidation. There's really nothing bearish about that, okay? I can draw a rectangle in this area here, and this is a giant higher low. As we know, higher lows typically lead to higher highs. So just like gold, it's a matter of time before this thing squeezes, unless we take out 8,500. Now the key support is this 76.95. That's still in play. And that's really what needs to be taken out in order for the structure to be considered different in terms of the swing trade strategy that we operate. We just go by the rules, and that's it, okay? So based on the rules, this thing is still strong. It's just going nowhere right now. And there are periods, like we see this in Forex all the time, where the market gets quiet and there's just nothing to do. All right, so you have to wait it out. Now, if this thing pulls back to 8,500 or somewhere around there and gives us another buy signal, then we will send out another swing trade long idea on that signal, okay? Hopefully, if it's closer to 8,500, that will give us a more attractive reward risk, okay? And you can't beat that. So that's what we're looking for there. I know I speak a lot about Bitcoin, but it's important to have that perspective, especially going into next week, because things can change really fast. And if Bitcoin starts pushing this resistance, You're going to see everyone get all excited again, and all the shorts are going to get angry again, and all it's the same nonsense over and over. Okay, doesn't matter how we feel. All that matters is where are we? Okay, what's the probability of the location, and is there a setup? That's it. That's all we need to know. Okay, and the answer is we're near a resistance and there's no setup. All right, so let's get into the stock market now. All right, and thank you for sharing those stock tickers there. We're definitely going to take a look at them. Okay, so let me just run through my usuals. Now we have the NASDAQ right here. All right, now this is tricky. So the NASDAQ has been nothing but strong, as we know. This whole week has pretty much been strong. We had the Powell testimony on Tuesday and on Wednesday, which kind of made some indecision here with these indecisive candles. But the market was relentless. Every time it tried to sell off, got absorbed. Now today we're getting this bearish pin bar. Okay, and we have, what, about 2 hours, a little less than 2 hours before this closes. Is this a double top? Well, technically, yes, it is a double top, and we're getting a bearish pin bar there. But it's still a little early to make a harsh judgment on this because, first of all, we need to take out the low of that pin bar, which means we're not going to know anything till Sunday night or Monday if the double top is activated. That's number one. Number two, just because we have a double top, okay, off this basically 10,100 area, does not mean we have a trend reversal. All right, in order to prove that the trend is changing, it needs to start taking out support levels, and it's got a ways to go before it does something like that. The first support, which is this higher low over here, okay, you're looking at 98.13, basically, no, I'm sorry, 93.83. So basically like the 93.5 area. You need to clear that in order to confirm that the double top is in play. That's a long ways. So that's when market structure proves that something is changing. Until then, this may consolidate just like we've seen in gold, just like we've seen in Bitcoin, where it just pulls back to a bit, gets everyone all short, gets everyone out of their positions, and then becomes another buying opportunity. We don't know. We can't make that prediction, okay? All we can do is wait for the market to provide evidence of something. So like I said, we can get something like this. All right, I'm gonna draw it with these trend lines here. We can get something like this. It's very possible. We get one of those symmetrical triangles for an eventual breakout higher. It's possible. Or we can break lower. Now again, remember that key support is still around, actually it's a little higher. It's probably going to be in the higher 8,000s, maybe that 9,000 level. But that's what we're looking for a high quality buying opportunity, meaning, long-term portfolio adds at such an area for high quality stocks, right? That would be the location for something like that. Remember, location first. So that's where the NASDAQ is. We've been saying it's vulnerable, right? The higher it pushes, the more vulnerable it is. And like, Michael had a question earlier, or what was it, yesterday in the chat room, where, he was in Square from a great price. Square is pushing 100. And, Andrew mentioned that it can go to 120. Sure. But you know what? When you're at highs, it's never a bad idea to reduce risk. If you feel like, hey, I want to take something off the table, take it. It's a good habit to get into. I don't care if Square runs to 200. You're reducing risk. And in the long run, that's what's going to allow you to produce consistent returns, not going after home runs. Home runs it's a gambling mentality, and it usually leads to a lack of performance. Okay, people don't realize that, but over time, it's a hard lesson to learn. So, okay, let's get into, hey, Michael, see, I was just talking about you. So that's the NASDAQ. All right, any questions, let me know. So let's jump into gold here. Let's take a look at gold real quick. By the way, the NASDAQ represents more than just the NASDAQ. For me, it represents the entire market. All right, so that's the S&P, that's the Dow, and that's the Russell. They're all going to be slightly different than each other in terms of chart. I mean, I was looking at the Dow earlier, and it's not as strong. None of them are as strong as the NASDAQ. But if the NASDAQ pulls back, you better believe they're pulling back too, okay? Because they're going to follow each other. All right, so let's take a look here at gold. Now look at gold. Again, we have to be very patient with this, okay? Where are we now with this thing? 1741, all right, is where this thing is right now. Nice. But we had to put up with a lot of nonsense and a lot of noise. Now, our recent trade on gold, as you could see here, was at 1703. This was called back here, all right, which was what, June, around June 7th or whatever that is, all right? And we've been in that trade ever since, right? It went to our first target, and now we're waiting for our second target, and we just have to be patient with it. And that's it, you just let it run. Nothing to do, but let it run. There's been some pin bars and stuff like that along the way, but this is a tough place to take a new trade. And that's why we didn't issue any new trade ideas in that area, because for one, we're in from a much better price at the range low. And here, if you're buying up in this area, which a lot of people are going to do, it's much riskier. And that's the whole idea behind this trade. We took a much better reward risk. If a trade has a very high risk, I'd rather miss it. I don't care if the probability is higher that it's going to break out and it's going to produce some kind of profit. I'm only interested in the risk, because I know that over time, that risk is what's going to make things hard for me if I keep taking such trades. I want attractive reward risk. I want, closer to 2 to 1 if I can get something like that. I mean, this trade had 2.0. A lot of times we get, 1.5, 1.4, 1.3. We'll take those. Anything greater than 1. But the thing is, the higher the reward risk, obviously, the better. So this is in good shape. This is a nice higher low. We break out. This thing's going to 1800. I mean, I don't mean to be opinionated or anything, but this thing has been strong. The fundamentals are behind it. Okay, so there's no fundamental argument for this thing to be going lower. And if it clears, 1800 is a very reasonable target for this thing. And as you can see, we have 1815 as our third target. This thing can obviously go higher, but we like to be conservative with the targets. So just let this thing ride, And we had a question here about NEM, which I'm going to talk about, because when we called this gold trade, a lot of our Eurozone traders had a hard time with the CFD, because not all brokers offer this CFD. And so we talked about some alternatives, like some gold stocks, and Newmont Mining is one of them. So we're going to talk about that. In fact, we're going to do a whole webinar. I'm hoping to get this webinar out next, not this coming Sunday, but the following. I'm hoping to get that webinar out with gold, metals trading, paper and physical, okay, where we can really address in detail how to get involved effectively on both sides of the coin, I guess I should say. All right, so anyway, all right, so that's gold. Gold's looking good. Now let's take a look at, I wanted to throw in a Forex pair in there, the pound, because this thing has been, should rename it, instead of the pound, they should call it the pain. So they should call it, because I know me and my bad jokes. So it's Friday, I'm allowed to make bad jokes. So we had a swing trade long idea here based on this support where that green candle is. And it was working for a bit there, but then it gave us the bearish pin bar. Now, we talked about the bearish pin bar. And, I said, look, we're just going to stay in this thing. Because how many times have you seen a bearish pin bar only to get faked out? Now, could we have gotten out early? Sure, after the fact. Oh, yeah, right, we could have gotten out. But if you look at something like Roku gave a very similar situation. If you had gotten out on that bearish pin bar, you would have missed out on a huge profit. Okay, so here's the thing. It took out our stop at the 24.45. Now, stops are a good thing, because if you didn't have a stop, this thing is now, what, 200 pips? 200 pips lower, right? So 100 pips lower than the stop. And our stop was about 150 pips to begin with. So that's 250 pips, okay, which is, that's an unreasonable amount of pain to take in such an instrument. So now what? Is this thing, bearish now just because it has this slightly broader bearish movement? Well, let's see who's listening. Who says that the pound is still bearish, or the pound is bearish now? Who would say the pound is bearish? Anyone? And I know this takes a bit to get to you over there, but while you're answering that, we do have the lower high, okay, and we have this bearish momentum. But we also have two levels in here, all right? One is this 2284, the other one is the 2484 area. We cleared 2484, but we still haven't cleared 2284. So, okay, see? So you guys are paying attention. Not bearish. It's not bearish, because this can definitely develop into a higher low in something that's generally strong. Why do I say it's generally strong? I mean, it's going lower. Well, here's why it's generally strong. I'm going to show you. First, you have this initial move from this low, okay, Right. Well, it's either in a range, but we do have some bullish structure, and we can't ignore that. This is not like, a couple of days worth. This goes back to March. We have this low. We have this gigantic higher low consolidation that it tried to break out of, and now it's just pulling back and testing the consolidation. That level, that 2280 level, that's a key support level. Okay, so we haven't even touched it yet, which means this is just noise so far. And between now and Sunday night or Monday, this can turn into a pin bar, or we can get a bullish reversal that takes out the high of this candle. So I'm still interested in longs, and we don't make the mistake of stepping in front of it. What I want to see is the reversal, and I would love to see that reversal above this support. If we see that, like a pin bar or an inside bar, we're going to send out another swing trade idea long for the pound. Okay, and the euro is in a similar situation. In fact, the euro is stronger looking. I mean, I'll pop that up real quick here. Here's the euro. Well, it was, look, you saw where the pound was, and the euro is in a much stronger position in terms of structure. Hasn't pulled back as dramatically. Okay, in fact, you have this old resistance back here at this 11.5 area, and we're just getting there now. So this thing turns green. This thing can also be a nice buy signal. We probably won't send out both. It's going to be one or the other, and we will most likely choose the pound because the pound usually moves faster. Okay, so anyway, just wanted to put those in there. Now, so we got some stocks here. Before I get into your stocks, I just want to show one of my stocks. Okay, and that is ROKU, because ROKU is a nice example of patience. Okay, so let's talk about this real quick, and then I'm going to get into your stocks. So we sent this out on the 28th of May. Okay, and that was on this pin bar back here. Was it back here? I think it was back here. Okay, where's May 28th? Let me see. Yeah, it was back here. Okay, this is when we sent out the trade idea, and we had to sit through some nonsense. In fact, it almost stopped us out. But we said, look, we're just going to let the market determine the outcome of the trade, and that's what we did. Either it was going to stop us out at 98.70, which it came close to, or it would eventually work out. Well, we just stuck it out, and so far it's reached 2 targets. Okay, today it was only 4 points away from our third target at 136, but it went to 118 and 128, took out those targets in basically a 2-day period. So that was a very nice trade, and now we're getting this bearish pin bar. But like I said with the pound, we had that bearish pin bar too a couple of days ago, and it's a good thing we ignored it. All right, we would have missed our second target. So we just have to, again, let this thing do its thing. We've reduced our risk now by 2/3, and we only have 1/3 on. So even if it pulls back a bit, we can't take the pain now. We took a lot more pain when it was developing this double bottom. So that's the flexibility you have by reducing risk. And that's why I always emphasize reduce risk. Some people say, well, if you think it's going to 136, why not hold the whole position? Because I don't know if it's going to 136. That's 136 is it's a reasonable target based on recent structure, okay? But there's no way to know if it's going to go there or not. It's just within reason. And that's why we have targets along the way, so we can reduce our risk in case it turns earlier, okay? So that's ROKU. Just want to put that in there. So far, it's acting very well. Even though the market, by the way, the market was pushing highs when this thing was fooling around near its low, and then it came to its senses, okay? Let's go over, all right, so some great questions here. Let me go over your questions. So Ricky, now that you've got your second target, would you move the stop to the entry point? That's a good question about something like ROKU. I mean, it's not a bad thing to do. Okay, 109.50, you want to put your stop there. So now it's a break-even trade. So if you break even on your third portion, the trade is still a green trade. It's just you gave back 1/3 of the profit. Yes, that's not a bad habit to get into. Sometimes I don't do it just because I forget. But it's not a bad habit to get into, all right? And it'll save you. If the market has a dramatic turn out of nowhere, it'll save you because you'll have a nice, you'll still have a green trade and not have to deal with giving back, profit that you've locked in. So yeah, good question. And I would say, yeah, doesn't hurt to do that. Now, it's good that you asked that. You should, at this point, for those of you that have been following us for a while, hopefully you've learned some things and you have the confidence to use your discretion in that way. I mean, that's just a good habit to get into. The thing is, reach your second target, put your stop at break even. Nothing wrong with that. Anytime you're reducing risk, that's a good habit. So your risk went from 98.50 or 98.70 to 109.50 to break even. So now that becomes a risk-free trade. Always a good habit. There will be times when you get knocked out and you'll be like, oh, I should have taken my, oh, I should have. It doesn't matter, because as long as you keep producing risk adverse or smart risk management, as long as you keep producing that type of behavior, in the long run, you should be further ahead than behind, okay? Because you'll always be reducing risk instead of putting on more risk. And that the outcome of that is basically profits, okay? That's the outcome or the byproduct of good risk management. All right, so good question there. All right, so let's start with Jumia here. I got JMIA. Let's take a look, JMIA. And so again, we've been talking a lot about this one, especially with the podcast. And again, it had this pullback. It's an inexpensive stock, and it may not follow the market exactly. You're getting a bearish pin bar right now, even though the candle is not red. It's still a bearish pin bar because the pin is on the top. And I mean, that's typically a sign. If you take out the low of that pin bar, you maybe get some more pullback here, all right? And it's possible that you see this $5 area if it chooses to test this low, this old resistance, new support. So if you're in this and you don't like that idea of pulling back to $5, it doesn't hurt to take some off the table. Maybe reduce the position a bit, because here's the thing. You can always get back in. Keep in mind, if the market peaked, that thing that we saw in the NASDAQ, that pin bar, if that produces a broader retrace, everything is going to feel it, okay, including this stock. They're all going to feel it. So it doesn't hurt to reduce risk in such a situation. And if it, like I said, if it turns sooner, you can always get back in. But at the same time, you don't have to exit your entire position. You hold on to some in case it's a fake out, right? So either way, at least you're still participating in it, if that makes sense. It's hard to we can't make harsh judgments and say, okay, this thing's bearish now. We can't do that. We have a higher low. It's coming from a higher high. It's just the market is hesitating a bit, and this could just be noise. We may get a tiny little pullback of maybe, 25, 30 cents or something, and then it gives you another bullish candle to go higher if the market, reverses sooner than everyone thinks. And we've seen this a couple of times so far, over the previous couple of months, okay, in the NASDAQ. All right, so good question on Jumia. Let's see, now work. Let's take a look at Workday. I believe it was Ricky had a nice trade on this. Was it Ricky? Off the previous move that you had asked me about. So it reached target 1. Well, here's the thing. So it came off this higher low. A lot of stocks are showing this type of situation. Like Jumia looks kind of similar. Now here we have an inside bar. All right, and it's not acting as bearish as some of some of the other charts that we looked at, like ROKU or Jumia. Now in this situation here, there's really not a whole lot to do. You still have this gap, right? This gap to close, which means price. It's possible price can test higher into perhaps like the 35, 36 area. It's possible, but remember, you need the market to cooperate. If the market does not cooperate, these stocks are going to suffer. So remember, you can't always look at the stock alone. You have to look at the stock in the context of the broader market. And today it's showing that sign of weakness. Doesn't mean we're going to get follow through, but it is a sign. We need to be careful because the market has been in a vulnerable position to begin with. So again, like Jumia, if you're in a bunch of, if you're in a position, and I'm going to use 100 shares as an example. If you have 100 shares and you're green and you see the market starting to hesitate, you'd be like, well, you know what? Maybe take off 30 shares, maybe take off 25 shares, lock it in, because you can always get back in. And for some reason, if it gaps higher on Monday and, I missed out, you didn't miss out anything. You still have 75 shares. What you did was you reduced the risk, because there will be a time when it pulls back and you'll be happy that you've gotten out. Remember, the idea for long-term consistency is producing or showcasing the same effective habits over and over again. And that's, risk. Reducing risk is a good habit. It's not a bad habit. The emotion is what makes you feel bad about it when it seems like it was a mistake because you could have made more, right? That's an emotional thing. And that thought, that idea gets us into more trouble than it's worth. Okay, so that's what I have to say about Slack or basically Workday. It's in a strong position. I mean, the structure is still strong. We still have higher lows. We just have some hesitation here because of the market, and it's going to need the market to continue higher. All right, so just keep that in mind. And nice job on that, Ricky. So let's take a look at NEM, Newmont Mining. So now NEM, this is one of the stocks that we talked about as an alternative to the gold CFD because we had that nice gold trade. And as you can see, the CFD is performing well. Like I showed you that gold chart, XAU. And these stocks, look, the stocks are always going to be, they're not going to move one-to-one with gold. The reason is each stock has its own financial situation on how they're mining the gold, their cost of the mining of the gold, and how, do they sell futures against the gold? All these different factors will play into, how the stock performs relative to gold. But if gold pushes to 1800, these things have no choice but to follow. So I was explaining to someone in a free chat room, I like to think of these as the altcoins against Bitcoin. When Bitcoin breaks, the altcoins have really no choice but to follow. So here's the thing. NEM is in a strong position like gold. Why? Well, you had this nice push off the March low, right? All the way to this high here, which is at 69.12. All right, pulled back, and it's been consolidating ever since. At this point, it's just a matter of breaking out of this consolidation, right? And what has gold been doing? It's been consolidating as well. It still hasn't broken out of the consolidation, although it may be on its way. So what you need on NEM is a close above this 59.88. Basically, you need to push 60, and this thing's on its way. Again, you're going to need gold to support you on this. But I'm not worried about gold. I'm very bullish on gold. Not only does gold have the technicals going for it, but the fundamentals as well. And when both are lined up like that, it's very hard to go against something like that. There's no reason for gold to be going lower in relative to the context of what's going on in terms of the stimulus and all the other stuff that's going on. The actions that the U.S. government is taking and also world organizations are taking to keep markets liquid, right? That means basically printing money or creating new money in different ways. Those type of economic tools can only be bullish for gold, right? Because gold is a store of value. So we don't trade on fundamentals, but when you have the fundamentals behind you like that, it can only help. All right, so you have this little attempt at a breakout here. I won't go too much. This price action is not going to be as meaningful to me because it's really up to gold. Okay, if gold pulls back, this thing's pulling back. So if you're in NEM, it's just that's your alternative to gold. You just have to sit through it. If gold pulls back and you have to take some more pain, you have to take some more pain. Okay, you have an old resistance here at 52.49, basically 52.5, which should act as a new support. Which it acted as a support back here on June 5th, and it's likely to act that way again if you test that level. Otherwise, nothing to worry about. Just sit back and let that thing do its job. All right, so that's NEM. I hope I answered your question there. Let's see. Hey, Joy, how you doing? Let me see. So, Ricky, would an increased strength? All right, that's a good question. Would the increase in the strength of the dollar? Now, remember, now the dollar is affected by many different things, right? Especially relative to all the other currencies. We're in an easy money environment right now where there's stimulus, there's all types of things to create more money, right? The government's trying to keep markets liquid and they're trying to create more money. In that situation, that's a fundamentally bearish situation for the dollar because the more money that you create, right, the more dollar you have, the less it's worth, right? That's called inflation. So the government creates inflation. They use that as a tool to keep things going. right? And as long as they're not raising interest rates, the dollar is going to have a hard time staying strong. It may find some strength here and there, you know, because again, it's noisy, as we can see. And there may be some other factors that get the dollar going. But it's kind of tough for all, like gold and the dollar and the currencies, like they can't be going in the same direction at the same time. They can't be doing that for long. Okay, so, but to answer your question, you know, about the dollar, in theory, dollar strength should be negative for these things, in theory. Doesn't mean that it will happen because markets are irrational, but in theory, dollar strength should be. Okay, stronger dollar, weaker gold, or weaker oil, weaker, you know, anything against the dollar. So we'll see, we have to see how that goes. But right now, you know, that, and this is where the charts will also help to clear up the confusion. Because the dollar, sometimes you have these situations where they all go in the same direction, which is unusual, and it's hard to understand. And a lot of people will then, you know, go crazy trying to figure out why, but it doesn't matter why. Just pay attention to the chart, and the chart will give you the best guidance, okay? So, and the reason for that is supply and demand of order flow, it's all reflected in the chart, order flow. People are voting with their money, and the smart money knows things that we don't know. So as long as whoever's buying, if they're buying it and they know stuff that we don't know, they're going to hold up the market. It's going to create certain patterns, and that's all we need to see. We can measure risk off of that, and that's all that matters, okay? Especially for the short term. So good question there. All right. I'm just catching up to you here now. So Michael, euro looks beautiful in terms of waves and fib. Well, yeah, the euro is in the euro looks nice and strong. You're right, and it does look in terms of Elliott wave. There's a nice impulse structure there, and that's why I'm all about getting back into the pound long, because if the euro turns and goes higher, the pound is going to follow most likely. Okay, Carlos, how did you choose a stop loss for ROKU? All right, that's a good question. All right, let's go back to ROKU for a second. Okay, so ROKU, how did we choose the stop loss? Well, you know, we took this trade back here on this pin bar, right? And the low of that pin bar was 101.63. So we know one thing. We know that you can't put the stop at the exact low because this thing called stop hunting, right? And everyone puts their stop there. And then you have all these stop orders sitting there. So, of course, people that can see that, certain people, market makers, brokers, whoever, they can see those orders. They know where they are, okay? And they'll push, they have the ability, they have the money to push the market just enough at times to trigger those orders and then take the other side. That's called stop hunting. And that's an old, very old game. So in order to steer clear of that, we always put our stop a lot lower. Okay, now in this case, that 98.70 level, the other thing was, my thinking was this, the $100 level is a whole number. It's an inflection point. Lots of people are going to put their stops at 99, okay, or at 99.50 because it's just below 100, and they're going to be hoping that 100 holds. But again, like I said, they can reach just a little further. All right, and I figure, well, 98.70, that's going to be tough to reach. That's going to be hard. Okay, I mean, it can happen, but if it breaks 100, it's really going to have to break. All right, that's why I put it that far away. It was really based on the whole number of 100. So so there's really nothing technical that can help you determine that. That just really comes with experience, because I know how this thing trades, okay, for one, and I know how, you know, I know the games that they play. So I wanted to put it out of reach of that type of game. And yeah, it was more risk, but I'd rather, you know, adjust my position size rather than getting stopped out, okay? Because that could have easily been stopped out if we put our stop, you know, slightly below the pin bar, as you could see, because the market went lower. All right, so I hope that answers your question there. Good question. All right, and all right, so let me see here. Also, GLW, but waiting for a nice pullback. GLW. All right, so that one, that's an old one. I remember this one from back in the day. Okay, so yeah, great. Look at this great structure here, right? Nice. This is a nice Elliott wave structure. You have 1, 2, 3. This is a 4. Now you said you're waiting for a pullback to 23. Let's see, where is 23? Around here. Okay, that makes sense. That makes sense. You know, you're not touching your wave one just yet, and you have this old resistance at what, 2306. That area should basically act as a new support. It may not go exactly to 23, but if you're in those 23s and you get your reversal, or maybe even a double bottom, like a more complex reversal where it takes a couple of days, yeah, that would make sense. Okay. Now again, this one, I haven't looked at this one in a really long time. So, you know, I don't know how well it relates to the market in general. I know that obviously it was following the market, you know, when the market had the big pullback, and obviously it followed the market as the market had that recovery. So I would imagine that this is going to be market dependent. You know, it seems to be pretty market dependent just based on what the way this chart looks like. I mean, a lot of charts look like this, but it's strong. I mean, there's no question it's strong, and you might want to wait for some sort of pullback. Maybe it doesn't go there. Maybe it goes halfway. Maybe it goes to the 24 area and turns. But buying the higher low is better than buying the high. Okay, that makes sense. So good question there on GLW. Now let's see, Scott. Hey, Scott. Just joined. Not just sure if you have covered it, but can you cover dollar yen and explain some of the correlation of how it might move? Okay, so dollar yen, that's not a pair that I typically follow because it's just very slow, but let's take a look at it. Now, its relationship to the dollar, or to the S&P, typically it follows, typically. Now, as you can see, this has not been following the S&P or the NASDAQ. It used to follow, the correlation used to be much better, but now it's not there, right? This thing, the S&P and the NASDAQ has been pushing highs, and this thing has been going absolutely nowhere. Now, this thing looks more like, it's obviously following the dollar. This thing looks more like the British pound, okay, against the dollar, even though this is the actual, you're trading the dollar. Now, the yen is a pretty stable currency, right? And that's why, like, a lot of pairs that trade against the yen, like the pound yen, the Aussie yen, they have some pretty dramatic looking charts because the yen itself doesn't really move that much, okay? It tends to be more stable. So, you know, I wouldn't say there's a whole lot of correlation right now in this thing against the S&P, because clearly it's not on the chart. I mean, look, I'll pop an S&P chart here, or the NASDAQ chart. So that's the dollar yen, that's the NASDAQ, all right? No correlation there. So I would just, you know, this thing, if you're into this thing, I would just look to play the levels. I mean, the dollar franc will probably look more similar to this, right? Because again, the dollar is the first pair, right? Dollar, and then the other one is franc, or the other one is yen, the counter pair. So you're near a support, and that's the way you have to look at this, okay? You're near a support, and you had this dramatic push off that March low, and that is so far the structure that's in play. So even though you have a lower high and it's looking kind of ugly and it looks like it should kind of pull back a little further, again, this is a potential area to reverse for a long, if anything. Now, you know, we just finished talking about how the dollar should be weaker with this environment of inflation. So it's very possible if that follows through, you know, and we take out these supports, then that would make sense fundamentally. All right. But again, we don't trade on fundamentals. We have to look at the levels. And as a short-term trader, especially as a swing trader, I would be looking for a long in the dollar if it were to retest these lows. All right. This 105, 106 area low and give a reversal, which is a bearish sign, you know, for things like the pound and the euro. But again, we have to see, because even to get to that point means the euro and the pound have to try to go higher, right? Relative to the dollar for this thing to even reach that point. So honestly, I find this thing confusing. I'm not a big fan. That's why I'm not a big fan of the dollar yen. I like the euro dollar a lot better. The euro dollar, pound dollar. I like the dollar. I like the currencies that are crossed against the dollar, not the dollar crossed against the currency. Like the dollar franc is a pain. The dollar Canadian is a pain. You know. You notice we don't send out a lot of trades in those pairs because they're a pain. All right, so that's the dollar yen. Good question there, Scott. All right, let's see. GLW, okay. Might be making glass. Oh, okay. Well, yeah, I know yeah. I mean, that's an old. They've been around forever. Okay. I mean, back in the day, they were a fiber optics play for the internet. So General Electric. Let's take a look at this. Is another one. Talk about old stocks, right? I know Andrew was a big fan of this one. I think he has a ton of it from like $7 from a while ago. So again, this thing has been, I mean, talk about lagging. So it came off this low, right? And is this company going to go out of business? Well, no, it's General Electric. But it's a tough stock in terms of, trying to play this thing. This is a long-term hold, basically. I believe they pay a good dividend. So this would probably be more ideal for investing than for short-term trading, because you have to sit around in it for really long periods of time. Now, in terms of short-term, what I see right from the start is this. I see a triangle right here. And obviously that's a consolidation. This high took out this previous high, not by much, but it still took it out, which means you have this bullish structure in play and you have this consolidation, which is typically a trend continuation pattern. So if this holds and you take out, the high of that triangle, or you start taking out some of these previous daily highs here, then this thing is likely to push higher. But remember, this stock in general, for one, it's a slow mover. Number two, it's generally a market stock, meaning it's going to be more, in line with the S&P and the NASDAQ, although this thing looks nothing like the S&P, all right, or the Dow in terms of chart. But typically, it's a market stock. So like I said, is this a bad place to buy? No, right? You're buying a pretty good company that pays dividends at a lower price rather than a slightly higher price. But again, this is the kind of thing you have to sit in for, a year and to really benefit from it, because it takes a long time for this thing to move. Okay, so that's GE. Now again, with these stocks, keep in mind, I do not get mixed up with fundamentals, because I'm only interested in short term. I'm only interested in, where it's going to be in a couple of weeks, maybe a month. I'm not really in these for, years, not for this type of trade. All right. Some people like to get very wrapped up with fundamentals, and I find them to be very distracting, especially for the short term. Michael, if you don't mind, as you don't care much for fundamentals, do you hold investments yourself, or do you just stick to? No, that's a good question. That's a very good question. I do hold on to some stocks as investments, not a lot, but I do hold on to some. It's not like that I don't believe in investing. It's just I'd rather put my money to work in things that will pay off faster. But I do have some stocks. Okay, I mean right now, as far as like long term, I don't have the best stocks. I have some of these very speculative, like the cannabis stocks. I still got a couple of those that I'm sitting on. I got caught in them on some short puts that I had, and now I'm just sitting in them because, and they don't pay dividends. So are they a good investment? Not really. But it's like I'm not going to bang out the bottom, and I don't have like a huge position in them. So it's like, that's my investment. I know it's kind of it's not really that good. But I do like the idea of buying high dividend paying stocks. Okay, stocks like like GE, or there's plenty of other ones, Intel, Walmart, MPC. We all know about those. And those, I love the idea of, but I'm not going to buy them. I want to buy them at, when we see another dramatic pullback, then I'm probably going to lay into them a little bit more, and put on some shares that I can hold on to. But yeah, so I hope that answers your question there. So right now, I don't really have anything significant for long term. Okay, but I'm not opposed to it. I love the idea of collecting dividends and selling options against my long stock. Okay, so DJ, what price are you willing to buy? That's a good question. You know what? I stay away from those. You know why? Because there's too much hype. There's too much herd mentality around those, like those and the biotechs and all that stuff. I don't like all that noise and all that hype. Way too much hype. So if I'm going to do long-term stuff, I'd rather stick to things that are a little bit more off that mainstream radar. Okay. So it doesn't mean that there's anything wrong with them. It's just a personal preference. I believe that would probably be a much better question for Andrew because he likes them a lot more than I do. And the ones that pay dividends or ones that are in, I guess, a better fundamental position. I know he likes to talk about certain ones, like UAL. He likes to talk about that one a lot. But I tend to stay away from those herd mentality stocks. Okay, so I hope that answers your question there. Like I'd like to get, some, like I said, some MPC. I'd like to get some maybe some gold stocks. I'd also like to get some tech stocks that pay nice dividends, like Intel, Microsoft. Microsoft's too high right now, but those are the kind of stocks I'm a bigger fan of those. Okay, or like Chevron, right? Andrew talks about that one a lot too. So, all right, so the good questions there. Good questions. Did I answer your question, DJ? Okay, cool. So, any other questions? Any other tickers you'd like to see? Any other markets? Because that's pretty much where we are now. So again, next week, today's Friday. We don't like to take trades typically. I know Andrew shared a couple of ideas. So he had that. What was the one he sent out today? The NVTA one. It's and I was liking Omnovia. I'm not Omnovia. I'm what's that stock called? Iovance. I know we had an options play on this one. We typically don't like taking trades IOVA into a Friday because things can change. But look at this position, right? I like IOVA. Look at that. So the thing is, so you want to prepare Friday. Friday is a good day to prepare for the next week. What stocks are in a good position for some possible buying, right? Because we're still in a generally strong market. Just because there's a pin bar doesn't mean we're in a bear market. We may see a pullback, but we want to have a plan. A lot of our trade ideas, they start with a plan. ROKU, I didn't just pull up the chart one day and say, oh, it's a buy. I didn't do that. I was watching ROKU for about a month before it finally pulled into an area where it was attractive and gave us a setup. And I was like, oh, okay, now we can get into ROKU because we missed ROKU. ROKU had that nice run to whatever it was originally. I'm like, how did we miss that? So I watched it patiently for weeks before that opportunity presented itself. So that's it. Again, Friday is a good day to start examining, evaluating the stocks on your radar. Which ones are in good locations? Like Iovance is in a good location, even though it took out that support. It's holding, okay, and it's got some potential there. And this is one that's been on our radar. So stuff like that. That's when you want to put these on your radar. And then as the new week unfolds, either the market will pull back and we'll see how these things perform, or maybe the market will not pull back, fake everyone out, and next thing you know, you have buy signals all over the place. And that's when, since you've made your plan, you say, oh, I like this one at this price, I like this one at this price, and now you're prepared to go. Instead of, should I do this, should I do that, I don't know, and then trying to evaluate it in 5 minutes. You can't really do that. So a lot of these opportunities come from preparation, not reacting, which is what the typical beginner, that's what they think it's all about, reacting. Finding some news, oh, that's good news, I'm going to buy it, right? And that's not how it works. That's gambling. That's called gambling. All right, so I just wanted to leave you with that. If you have any questions, again, please share them in the chat room. If I didn't address your question fully, I'd be happy to answer it there. If I don't see it, like if I don't answer it right away, please feel free to share it again, because sometimes I don't see them, and I'm not ignoring you. I didn't see the question. So please, share it again, and I'll be happy to answer that. Also, if you're new to Greenbridge, make sure you visit our website, greenbridgeinvesting.com. We have webinars. We have a whole webinar library that you could check out. That's for free members as well as our paid members. And we have a new webinar coming up. Again, I didn't send out that invitation, but I'm planning to send it out next week. I just have to get a couple of things together. And we're looking to do our next educational webinar on gold and metals trading, all aspects of it, not just paper, not just physical. We want to talk about both. Okay, so I'll leave you with that. Again, I want to thank you all for joining me on a Friday for like an hour. I know I talk a lot, but I'm glad that you're all getting something out of it. We had an interesting week. We had some nice trades, a couple of stop outs here and there, right? That stupid pound, but that's okay because it'll turn into a new buying opportunity. All right, so thank you everyone. Have a great day. and I will see you next week. Thank you for listening.